want to focus on supply rigidities. Why do we have supply rigidities around our increasing oil demand?
Hey, Tom, thanks for having me. I think there are two main reasons, the past and the future, right? If you look at the past, we've had terrible returns in the energy sector. It's been by far the worst performing sector across the S&P 500 in the last 6 or 7 years. So investors are really tired of throwing good money after bad money. And then if you look at the future, that's the other part of the rigidity is the uncertainty around the demand path for global oil and gas. I think a lot of companies really face this dilemma from their current investors, from management teams, and frankly from policymakers. Where is oil demand going? We just don't know how fast the energy transition is going to happen, and that in itself is a big hurdle to bring money back into the sector. We also don't know what the policy is going to look like in the next year, 2 years, 5 years. So again, the past and the future make it a very, very inelastic supply curve right now.
We have heard a lot recently, Francisco Blanch, from politicians whose fallback is they study one global price. You are a true student of this. Should nations craft policy on hydrocarbons, or for that matter, commodities, based on one global price?
Well, the answer is no. I mean, prices for energy are local in many instances. That is certainly true for most electricity markets. It is also partially true for natural gas. In the case of oil, it's less true. Oil is more of a global market. And then, of course, in the case of coal, there's also a lot of local markets. So it really depends where you're looking at. But each country and region faces different pricing on energy for the most part. So there is a global price, which is crude oil, the price of Brent, that sets the benchmark. But then there's a lot of local issues.
On the global benchmarks, crude, Brent crude, you were talking about $120 a barrel. Right. This is your new price target going into the end of the first half of next year. What gets us there, given the fact that you're already hearing nations talking about releasing strategic petroleum reserves in order to bring down the price of gas?
Look, I think releasing the SPR while at the same time you're printing a lot of money and giving it to people is a pretty bad idea. I mean, maybe you should start cutting back on stimulus before you start opening up the taps of your strategic reserve, which is really there to cope with emergencies. I mean, is it an emergency that we have a booming demand for oil, that we're coming back from COVID? Not really an emergency. I mean, I think you have to let the market do its work, and prices are signals that work through the demand equation and slow down consumption as they should, rather than throwing SPR oil on them. I think what's the reason we upped our forecast from 100 to 120 for the first half of next year is the global gas crisis we're facing. Again, not something that the U.S. is necessarily very exposed to because of all the domestic natural gas that you have in the U.S., but it's something that Europe and Asia have become very exposed to, and certainly the electricity markets in both regions have become very exposed to this upward demand shift. And again, so it's gas to oil consumption is a big return of travel. Today, or actually yesterday, was the first day that the U.S. allowed international vaccinated travelers to come into the country. That's going to lead to a booming air travel window here for the next 6 months, and presumably you're going to have Asia coming back in the second, third quarter of next year as vaccines roll out there.
Francisco, you said something I want to get a little bit more elaboration on, that perhaps the U.S. Biden administration should pare back stimulus before releasing the SPR. Are you implying that you think that the stimulus is behind the demand for oil that has led to this, the increase in prices that we've seen?
Well, I mean, I think that's pretty straightforward. The answer is yes. I mean, stimulus has been behind the impulse we've seen to global demand. Global exports, by the way, are up almost 30% over the pre-COVID levels. This has created a huge surge in Chinese energy consumption. I mean, Chinese energy thermal fuel demand is up 11% year on year, mostly because of the surge you've had in domestic consumption there and factories and what have you. So we are stimulating the economy. We want to have the jobs back. And ultimately, I think one debate that we need to have is today, economic growth is very closely linked to energy consumption. So if we want to have a different kind of economy, we want to have low hydrocarbon prices and a green economy and strong growth. I mean, we got to have better policies, and I think that's one area of discussion that, frankly, I don't hear enough about.